This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. You know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Conner Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi, everyone. This is Matt Conner with Conner Management Group, and this is the Best Stocks to Buy podcast. Today is Tuesday, October 2nd, 2018, and this week we're going to look at the best growth stock to buy right now. Our opening slide is called The Setup and the Approach. Now, the key objective of this podcast is to present to you a high probability upside potential stock. A key tool we use is a financial model, a proprietary tool we developed that uses multiple valuation approaches across over 6,000 stocks that we review every week. So the view you're getting is not driven by some sensational headline and some popular publication focused on increasing readership, but simply based on the best investment opportunity we could find to present to you. An easy way of thinking about our approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, I truly viewed creating such a model as daunting, but I believe I was well prepared for the challenge. I have both computer programming experience as an engineer and over $15 billion of transaction experience as a finance professional to judge the research we reviewed. So our approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections they share with the public. A point worth remembering is that these views are based on today. An unforeseen economic report, a regional conflict, or revised policy can change these expectations tomorrow. Benefit of using a professional money manager like Conner Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as having someone to readily share their opinion on whether a particular event is reason for concern. And now, so what did our model find for you this week? The best growth stock to buy right now we found to be a company in the automotive retail industry. On to our next slide. It's called the industry overview. The companies in the retail automotive industry can basically be categorized into either dealerships that sell new and or used vehicles or entities that sell replacement parts and related services. Now, just to level set, to give you some perspective, here are the 10 largest retail automotive competitors by market capitalization. Copart Incorporated, Advanced Auto Parts, Asbury Automotive Group, AutoNation, AutoZone, Camping World Holdings, Group 1 Automotive, KAR Auction Services, CarMax Group, and Lithia Motors. The main growth drivers in this industry right now are online automotive sales continuing to grow, positive GDP growth, and also a decline in demand for sedans and subcompacts. Here are some industry challenges. Management of the cyclical nature of the dealership business, carefully managing the the rare acquisition and spinoff opportunities in the industry, driving growth as the average life of vehicles continue to increase, competition from growing numbers of off-lease vehicles returning to the used vehicle market, and the impact of new steel and aluminum tariffs. And now for the big reveal. The best growth stock to buy right now that we found is a company called AutoNation. The ticker symbol is AN, and we see the 6-month upside potential at greater than 40%. On to the quick facts slide. AutoNation Incorporated is in the automotive retailing business. It's previously divested its rental operations, which included Alamo Rental Car, National Car Rental, and Car Tips USA, and it's closed AutoNation USA closed its AutoNation USA used vehicle superstores. The company sells cars through roughly 325 franchise dealerships in the United States, mostly in the Sun Belt. Their website is www.autonation.com. The company is headquartered in Fort Lauderdale, Florida. They were founded in 1991, and they have 26,000 employees. On to the metrics slide. Over the last 12 months, the annual revenue for AutoNation was $21.8 billion. Their net income over the last 12 months was $3.4 billion. The cash flow from operations was $592 million. The operating margins for 2018, they're tracking to be 4.5%. And for 2019, they're expected to remain flat at also 4.5%. Onto the valuation metrics. The trailing PE ratio right now for AutoNation stands at 10.8, and the forward PE ratio is now 8.6, and that means that there's an expectation that earnings will increase over the next year. The PEG ratio is at 1.1, which makes this attractive. The price to sales ratio is at 0.2. The price to book ratio is at 1.5, and the enterprise value to EBITDA ratio is at 10.8. Dividend yield for AutoNation is 0%. The company does not pay a dividend. On to the next slide is a price chart for AutoNation over the past year. About a year ago, the stock price was around $47, and about 5 months after that, it increased substantially to about $61, and then the stock price has pulled back to about $42. So the reason for the increase shortly from a year ago were due to greater than expected earnings in the fourth quarter of 2017. So in early 2018, the stock price had advanced a lot, and then it pulled back from that $61 level down to where it is now because there have been concerns about an industry-wide slowdown in automotive sales. On to the next slide. It's called Looking Back and Looking Forward. Looking back, as I mentioned, the stock advanced during the first quarter to 2018 as a result of stronger than projected fourth quarter 2017 earnings. AutoNation has successfully executed on its one price, no haggle business model, and the company also had rolled out branded high margin replacement parts, which is added to its bottom line. Looking forward, concerns over a sales slowdown now exists due to increases in interest rates, which would bump up consumer auto loan costs. AutoNation will continue to shift its product mix towards high margin products such as auto parts and service and pre-owned vehicles. Additionally, the company also expects to continue with a stock buyback program, and activity that usually drives up stock prices. The next slide is called the why now, the bull rationale. We expect the stock price of AutoNation to increase for the following reasons. Increasing sales per share over the next 2 years. Right now, the valuation metrics are low compared to historical levels, and we expect the valuation metric in the near future to be low, which should drive pressure on the stock price to increase. Additionally, the company is engaging in a share buyback program, which we also believe will be pressured to drive the stock price up. On to the summary slide. The financial statement quality of AutoNation we consider to be very good. The net profit trend is improving for the reasons we've recently mentioned. The price pattern trend has declined, as we've discussed also. The industry outlook is flat. Our overall market outlook, however, is positive. GDP has been increasing substantially, and we don't see it dropping off anytime soon. The recent closing price for AutoNation is $41.53, and our 6-month price target is $69, and that gives our 6-month upside potential for AutoNation of greater than 40%. So for all these reasons, we believe that AutoNation is the best growth stock to buy right now, and we hope you found this presentation helpful, and we'll talk to you again soon. Take care. Hi, everyone. Do you often wish you had a better feel for control over your investments? Do you often wish you had the ability to quickly get an answer to a question of yours when it comes to the economy or your investing choices? Do you often wish you had someone to bounce investment ideas off of just to be sure of your decisions? Well, I found you're not alone. And these are the reasons behind my firm, Connor Management Group. Connor Management Group is a registered financial advisor and investment manager in addition to being a podcast publisher. Our clients are professional individuals and small business owners. We help them invest and grow their retirement and savings accounts. Our special sauce, so to speak, is a comprehensive value and growth finding computer program we created that we talk about in our podcast. The program and our approach leverages time-tested growth and value investing principles and then some used by legendary investors Warren Buffett and Peter Lynch. Additionally, unlike others, we are forward-thinking and use social media to both serve and educate our clients and their families to become better investors. We figure the better you become as an investor, the more you'll appreciate what we do for you. We now offer a free mobile app available on both Android and Apple devices that offer our podcasts, additional stock picks, videos, expert interviews, weekly economic summaries, news, and more, including the ability to quickly send us a question or concern to me directly from within the app itself for a quick reply. To learn more about our service and to download our mobile app, just visit our website at www.connormg.com. Or if you prefer, simply give me a call at 281-947-2201. That's 281-947-2201. All right, have a good week.